Are you out looking for a home right now and you're worried that you're not going to be able to afford the payments with these high interest rates? Well, you're not alone. I'm hearing this from a lot of people right now that, you know, the home prices are coming down a little bit or they're stabilizing, but the rates seem to be going up. As of today, the end of April 2024, I checked this morning, they were between 7 and 7.5%, depending on where you live. Here in Utah, they're about 7.25%. So they're getting pretty expensive, and that has a big effect on the payments. So in today's video, I'm going to give you my top 10 ways that you can save on a mortgage and get the very best rate, which is going to save you a ton of money over time. So I appreciate you joining me today on the Utah real estate market with me, Chris. It doesn't matter if you're looking to buy, sell, relocate, or invest. I love talking to people, and I love giving them the best advice I possibly can to help them make the best decision when it comes to their real estate decisions and saving money. Also, doesn't matter whether you're moving in 9 days or 90 days. We love helping people all around, and I get phone calls every day from people asking me questions, how the market is, where can I find the best deal, what the best builder is, who's got the best prices, things like that. So feel free to reach out to me. All my information is down below. If you're getting any info out of these videos, or if these videos are useful and helpful to you, please take a second, do me a favor, hit that like and subscribe button so we can get this information out to as many people as possible so that they can save on their mortgage rate as well. Let me give you a quick example of the difference that a mortgage interest rate can have on the same value loan. So say you have a loan for $600,000 at 7% interest rate, and it's a 30-year fixed loan. That payment's going to be $3,992 a month. You're going to pay $837 in interest over the life of that 30-year loan. Now say you have that same amount, $600,000 at 5% interest rate. Your payment's going to be $3,221 a month, and it's going to be $560,000 over the life of the loan. That's a savings of $277,000 in interest. That's a lot of money. That's a lot of money every month that can go back into your pocket, or it can go back into helping you with increase your home equity. So when you go to sell that home, you can upgrade to a better home or a larger home if you want. Or when you downgrade a home, maybe you put that money back into your pocket for retirement. But interest has a huge effect on not just your payment, but the amount of interest you're going to pay over the life of the loan. And so on today's video, I'm going to give you my top 10 tips on how you can go out and get the best mortgage interest rate and save on your monthly payment and save tens, if not hundreds of thousands of dollars over the life of your loan. It really does make that big of a difference. And if you stick around with me to the end, I'm going to give you my very number one contact and tip where you can get the best interest rate right now. And I've been in the business for a long time, and so I've got a lot of contacts, and I get hit up by mortgage brokers every week to go out to lunch with them or why I should use them. And I go out with a lot of them and talk to them and see what they can do for my clients, because I want to find the very best deal for my clients and make sure that they're getting the best price possible. Well, I recently went out to lunch with one, and he beats all the other ones down, I've got to say. So I'm going to give you his information at the end of the video, and I get absolutely no kickback from him whatsoever. I'm just passing this on to my clients and you so that you can save as much money as possible. So let's dive into today's video with my very number one tip, and that would be your credit score. If you have a credit score of 620 or less, consider talking with a credit score counselor so that you can make a plan to get that credit score up above 620. When your credit score is below 620, it closes a lot of doors for you on what loans are even available to you. A lot of lenders are not interested in loaning money to people that don't make their payments on time, and that's certainly understandable. But see if you can get your credit score up above 620. That will get you a lot better interest rate, just that alone. And if at all possible, get it up, 700, 720 or higher. That's really going to open a lot better doors for you. Tip number two would be go out and compare different mortgage brokers. So mortgage broker is somebody that you can go to, you can fill out one application, and then they're going to go shop around and see what they can do for you. But mortgage brokers are not all the same. Mortgage brokers have fees built into their mortgages that they get for people. And some charge really high points and fees and service charges and things like that, and other ones charge a lot less. So what you want to do when you're comparing mortgage brokers, make sure you get the APY percentage. That percentage is going to allow you to compare apples to apples. The APY percentage has all the fees that you're going to pay from that particular mortgage broker or that bank or credit union in there. It's going to allow you to compare apples to apples to see really who is giving you the best deal. So go out and find a mortgage broker. There's lots of them around. Ask your friends and neighbors who they like and go apply with them and see what they can do for you. My number 3 tip would be go out and find a local credit union. Credit unions usually offer lower fees, and sometimes they can offer a lot better interest rate. So go in and get a 30-year quote from them, a good faith estimate, and ask them, for a 30-year fixed rate and what they can do for you on the home amount that you're looking for. Also, make sure you get pre-qualified before you go out and look at any home, so you have an idea of what your debt-to-income ratio is and things like that. They're going to pre-qualify you and tell you, what exactly, how much of a home that you qualify for and how much of a payment you qualify for. You want to make sure you're not, getting yourself into a bind with too high of a payment. And if you get pre-qualified for something, they'll look at your income and your credit score and all of those things, and then they'll tell you what you qualify for, so you're not wasting your time looking at homes that are out of your range. Number 4 would be go and find out your traditional bank, what they have to offer. Surely you've been saving your money somewhere with a checking account or savings account at a bank in your local area. Go in and talk to them, get a good faith estimate for them, and see what they can do for you. You've already got a relationship with them, and sometimes they can give you some pretty good rates. So go to a traditional bank and see what they can offer you. Tip number 5 would be using points to buy down your interest rate. So when you use points, you're basically paying interest up front. You can go from a 7.5% loan to a 7% loan, and that might cost you $10,000, let's say, in upfront interest payments. It would be a lump sum thing, and that's one way that you can buy down your interest rate. Now, they do have a max that you can buy down your interest rate to, so you can't, buy it down to 3% or 4%. But you can usually get a couple of percentage points off of that if you pay enough points up front. And points are just the amount of money that it costs to buy down an interest rate, 0.25% or something like that. That goes right along with my next tip, which is when you're looking at homes, instead of asking for money off of the purchase price, ask the seller to contribute $10,000 or $20,000 to buying down your mortgage interest rate. If you just save $10,000 on the purchase price of a home, that's not nearly as good as if you can buy down that mortgage interest rate, because the money that you're going to save over the life of the loan of that 30 years in interest is far going to exceed the $10,000 or $20,000 you asked for to get off from the purchase price. So always ask the seller to credit you some buy down points so that you can buy down your interest rate. Point number 7 would be use different types of financing. Maybe you don't want to get a 30-year fixed loan, but maybe you want to get an adjustable rate mortgage. Adjustable rate mortgages went away for a long time because interest rates were so low, but now they're coming back. Adjustable rate mortgage is going to be fixed for a certain amount of time, and then it's going to adjust to whatever the rates are at that particular point in time. So for example, you can get a 3-year adjustable rate mortgage. It's going to be fixed for a certain rate. It's going to traditionally be, a point or two lower than what the going rate is today. But then in 3 years, it might adjust back up. So sometimes these have prepayment penalties. Make sure you check that. Make sure it doesn't have a prepayment penalty where they're going to ding you if you get out of that rate when your time is coming up. You can get a 5-year adjustable rate. You can get a 7-year adjustable rate. Just compare apples to apples, do the math, and see which one's going to work best for you. The next step would be using temporary buydowns. Buydowns would be like a 3-2-1 buydown. So for the first year, your interest rate's going to be bought down 3 percentage points, say from 7.5% to 4.5%. The next year, it's going to be bought down from 7.5% to 5.5% or 2. And then the third year, it's going to be bought down from that 7.5% to the 6.5 or the 1. That's where the 3-2-1 comes in. And on the 4th year, it's going to adjust to the whatever the current rate is. That's how a lot of people now are getting into these homes with payments that are affordable, because builders and other people are offering 3-2-1 buydowns or 2-1 buydowns. Or there's lots of different options when it comes to buydown rates, but it lets you get in with the thought that interest rates are high now, but for sure over the next 2 or 3 or 4 years, the interest rates are going to be coming down. That's probably good advice. It's not guaranteed that those rates will come down, but it's a good chance that they will come down, in my opinion. The next tip is something I've talked about on this channel before. I even got a video that I'll link up here to it for you, and that's why I'm telling a lot of my clients to go out and look at new construction homes with the builders. The builders right now are offering the best deals when it comes to new homes, just because that they have these incentives that they can offer people through their wide variety of mortgage lenders that they use. Usually they'll do a lot of stuff either in-house, and if you go with their preferred lender, since they do so much volume with them, they can get, big bulk rate discounts. And a lot of these builders right now, I just saw one today, it's offering 5.5% interest rate. So that's, almost 2 points off of what the going rate is today. So if I had to give advice to somebody where they could find the best interest rate on a new home, I would say go with a builder, because they're going to be able to offer you the best interest rates on the homes that they have, because they have to move their product. They can't just let their product sit around because that means they can't build new products. So they have to move their product in order to keep building. So if you're looking for a brand new home with few hassles and everything's new and you're not going to have to replace anything for a number of years, I would suggest going with a builder and getting their introductory interest rate. Now, the next tip would be seller financing or assumable loans. Sometimes you have somebody that's selling a home where their home is all paid for, and there's an option to do some seller financing. And traditionally, those people will do a seller financing at an amount lower than what the current interest rate is. I saw one today that was offering 4.5% on seller financing on a home here close by that we looked at, and that was a pretty good rate. They're willing to do that for a number of years, maybe 5 years, maybe longer. Typically, it's written up by a real estate attorney, the contract, and then you would be able to get in and make some lower payments that way with a seller financing loan. Sometimes you can also assume people's loans. A lot of people over the last few years got interest rates less than 4%, some of them less than 3%. Maybe they have some equity now, maybe they got a divorce, maybe they have whatever particular life reason, they got a new job out of state and they have to sell that home. They've decided not to keep it, but you could contact them and say, hey, we'll maybe pay a little bit extra for this home if you'll let us assume your loan. Now, some loans are not assumable, but the bank is really not in the business of closing on loans that are being paid back. Now, this isn't legal advice, but there's something called a due on sale clause, where if somebody has a non-assumable loan and they sell that loan to somebody else, the bank doesn't know if that person is vetted or not. They don't know if they can afford that payment or not. And they didn't sell that loan to that person, they sold it to the original person. So this happens very rarely, but occasionally they'll do something called the due on sale clause when they realize that somebody has sold their loan to somebody else without the bank's permission. But it does happen quite a bit where people will actually sell their loan if they've got a great interest rate, because it allows them to get a little bit more equity out of their home because that loan is worth something. And my last tip would be tip number 10. It would be using local and state assistance home buying programs. There's one called Ready Home from the federal government that offers $2,500 if you meet their criteria. There's another one in Utah that offers $20,000 in down payment assistance. There's a lot of details and other criteria that you have to meet to get those types of down payment assistance programs, but they can be really good for first-time home buyers. So if you got an agent that's smart, knows what they're doing, they'll know what options are out there available to you, and he can steer you in the right direction of what loan options you have when it comes to state and local home buyer assistance programs. And if you stuck around with me this far, I really appreciate it. Hopefully you've got some value out of these tips. If you have, remember to hit that like and subscribe button so we can share this with as many people as possible. And I appreciate you joining me today. I did tell you that I give you my number one tip or person that I have for saving and getting the best mortgage interest rate. I use Summitt Lending for most of my clients, or at least I refer them to Summitt Lending. Brodie Calder is his name. I'll put all of his information down below so that you can contact him. I have used lots of different mortgage people, and I have found Brodie to be the broker that offers the best prices by far. He usually cuts his prices in half just because he does a lot of volume and he can afford to do that. But also, he's generally just a nice guy, and he realizes things are really hard for people right now and they're very expensive. And so he's willing to give people really good deals in mortgage interest rates. And often he'll take the fees that he would normally get and he will help buy down that interest rate for people. So his company, Summitt Lending, offers some of the best rates I've seen out there by far. And usually everybody that I tell, go look at a bank, go look at your credit union, go look at a mortgage lender friend or family or whoever you have, and then go look at Brodie Calder with Summitt Lending. If you go look at those four people, most of the people come back and say Brodie's been the best by far. So I will put all of his contact information down below. If you just do me a favor, if you do call Brodie and end up using him, tell him that you got his information from me, Chris Kemp, and hopefully he'll give you a little bit even better deal that way. But Brodie's a great guy. He's really honest, straightforward. He can get you pre-qualified for anything. And again, I don't get any kickbacks from Brodie whatsoever. I just found his customer service and his rates and his prices to be better than anybody else's. So I appreciate you joining me on this video today. Hopefully you're getting the information you need. If you do have any questions, remember all my information is down below. Feel free to reach out to me by text or email. However, if you have questions about what's going on in the market, where you can get the best deal, who's offering the best deal, anything like that, I'd be happy to talk to you and point you in the right direction. So appreciate you joining me today. Don't forget to like and subscribe, and I will talk to you on the next one. Bye.